Hey, what is up, investors? I'm Jason, and in this video we're going to be talking about Palantir stock as well as a SPAC that is backed by Palantir. This is a company that Palantir was an early investor into called WEJO, and they are a connected vehicle data company. So right up the alley of what Palantir does, basically. So this is going to be a very interesting one because we're going to be covering some quick things about Palantir, and then we're going to go into this whole WEJO SPAC stock and talk about what they're doing. So as we get to it, if you guys don't mind, please do me a huge favor. Be sure to smash, destroy, annihilate, or just gently press that like button because it helps me out a lot with the YouTube algorithm. Subscribe if you have not already. And if you want to be a Patreon helper of this channel, I have one link is in the description. There's a private Discord connected to that. Now let's get to this. Now here in the month of May, we're seeing this nice V-shaped recovery with Palantir stock. They hit their lowest price that they got to of all 2021 on May 11th, just right around when the earnings came out. But luckily, they have started trending back up since then, so that's great to see. Now to get into some things that have just recently happened with Palantir, and that is that Palantir Technologies said Friday it has secured a $111 million contract with the U.S. Special Operations Command to continue its work as the military command's enterprise data management and artificial intelligence-enabled mission command platform. The U.S. Special Operations Command has been using Palantir platform in real-time mission operations since 2016, according to the statement. The new contract, which had $52.5 million executed upon award, includes a base year and one option year. So let's agree that contract is going to continue and bring in even more revenues. But there is another government contract that is new that is also one that has potentials to really grow, and that is their contract with Space Force. Now, recently, Palantir announced it will support the U.S. Space Force and Air Force critical missions with cloud-based data services in a new $32.5 million contract. This new deal will expand its existing partnership with both agencies. Space Force will use Palantir services to support its Space Command and Control program at the National Space Defense Center and Combined Space Operations Center. The Air Force will use Palantir's analytics tools to support its Project Brown Heron data gathering platform. Palantir will also crunch data for NORAD Northcom's Joint All-Domain Command and Control JADC2 upgrades, which focus on ingesting and modeling high-scale data for planning and executing military missions. Now, hopefully this news can start bringing some people back into this stock because we know the Palantir stock has recently come down quite a bit from where it was at its highs. There was a lot of people that was very bullish on Palantir stock back in January and February. It really hit 2021 with a bang. But we saw a lot of people start selling out of this stock, a lot of bulls getting out, and its popularity is kind of still struggling right now as a lot of people are questioning what the value of this company actually is. But they are continuing to grow their contracts, they're renewing contracts, and as well they are making investments into other companies, which can really help benefit them a lot. So now that's where I want to go right now. I want to go now into this particular SPAC stock where WEJO is the company that they're invested into, which is going to be going public through a SPAC with ticker symbol VOSO, and this is Virtuoso Acquisition Corporation. And to get right into VOSO real quick, is that this was just recently announced. So this SPAC has not even had the time to really pop off with any real big price here. If we look at the last 52-week range, which this is a newer SPAC, it actually hit the market in April and it's already found a target. Its 52-week range is $9.43 and $10.17. So we're still at the very beginning stages of this particular SPAC. So we know that come Tuesday that we can see this when everybody starts knowing about this and investing into it, we can easily see the price of VOSO going up really quickly. But letting you guys know this in advance, just so everybody has the opportunity to start looking at this stock if it's something that they're interested in investing into and jumping on this. Now, we'll go right back into what WEJO actually is. Now, as far as what WEJO does, WEJO uses connected vehicle data to revolutionize the way people live, work, and travel. WEJO provides capability to connect directly to integrated vehicle manufacturer sensors, enabling live insight and analytics for customers and auto manufacturer partners. Transactions anchored by key strategic investors, including Palantir and GM. Transactions implies an equity value of approximately $1.1 billion and is expected to deliver approximately $330 million of gross proceeds, including $230 million cash contributions from Virtuoso and a $100 million fully committed PIPE. Proceeds will enable WEJO to accelerate expansion of markets across traffic management, advertising, fleet management, insurance, remote diagnostics, car sharing and rental, roadside assistance, payments, SaaS solutions, and more. Now, some important information that we do need to talk about here is pursuant to the transaction, Virtuoso will combine with WEJO at an enterprise value of $800 million, which implies an estimated $1.1 billion pro forma equity value. WEJO's existing shareholders are rolling 100% of their existing equity into the combined company and will own approximately 64% of the issued and outstanding shares immediately following closing of the business combination, assuming no redemptions by Virtuoso's public stockholders. Now, so the enterprise value will be $800 million. But just to cover this, I think it is kind of important, is that their revenues for 2020 that they announced was $1.3 million. So keep that in mind, that it does have a big valuation, but the revenues are low. But the main thing that they're really focusing on is their compound annual growth rate over time. And also, when are they going to be a profitable company? So those are things that we need to be thinking about. So from now they're saying $1.3 million in revenue, and they're expecting $4.3 million by the end of this year. And they're expecting by 2025 their revenues to be $764 million. So the compound annual growth rate is 265%. And they're expecting to be profitable by 2024. So just some things to keep in mind, because there are some people that are already questioning this, which I've read in some forums, and they're wondering why is the valuation going to be so high of this company. So just to cover that, but we'll look at some other things here. Now, as far as some key statistics here that they're talking about, as far as the way that their market demand and increasing customer value is that they have 274 agreements, $14 million in total contracted gross sales, 30% year-over-year customer growth, 228% year-over-year in long-term contract value, 65% of customers repeat buy, 98% customers retention rate, $2.4 million is the largest single trade, and $800,000 year-over-year revenue from contract renegotiations. Now, as far as the OEMs that are working with WEJO, they already have pretty much all the major manufacturers. Of course, GM, because they're one of the investors, but companies like Volkswagen, Honda, Daimler, Hyundai, Nissan, Toyota, Ford, and many of the other major manufacturers, including Lucid Motors, is even on this list. And so they're saying in 2021 they have 10.7 million live vehicles, 50 million supply base, and by 2025 they estimate 120 plus million live vehicles, estimated 200 million supply base by that time. Now, looking at everything, I understand why Palantir is interested in this company while they're invested in them, because this company deals directly with data, collecting data. That's exactly what Palantir likes doing. It sounds like a very interesting company, and it already has a huge list of customers that are already working with them, and I think the possibilities here could be much larger, but it's something that we're definitely going to have to be seen. But the SPAC is just starting out, the price is very low, and this could mean a possible opportunity. Now, of course, this is not any sort of financial advice. This is just my opinion. Please do your own due diligence, but in my opinion, I really like what I'm seeing. I'm not sure if I'm going to be making any sort of investment anytime soon. Maybe check the company out for a while and see how things are. But anyways, I'd like to hear your guys' thoughts on this one. Is there anybody out there that is excited about this? Is this something that you're following? And what do you think overall? So thank you for watching. Please like, share, comment, and subscribe. New videos coming out on my channel all the time. Thank you.